Okay, hi guys, good afternoon. Welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the traders and analysts at First Trading. We supply analytical reports and trade recommendations on 13 currency pairs, stock indices and fixed income on a daily basis. Okay, this is our monthly webinar with FX Street, and we're going to look to go through as many of the FX majors as we can, and it's basically to look for a medium-term bias for the rest of this month. Okay, we will try and sort of rattle down into some short-term time frames as well to show what I believe is the best entry and exit levels or limit orders for the currency pairs we're going to talk about. First up, we're going to talk about the dollar index because I think that's extremely relevant at the moment. Then we're going to go down a cable first, talk about decent formation that's sitting in cable at the moment. Then we'll look at euro dollar, euro sterling, because of the correlation between those two currency pairs, and then the yen pairs. So dollar index. Now we've obviously seen quite aggressive selling in the euro dollar over the sort of last 6-7 weeks, maybe even longer than that, and also in cable. Cable, when we get to it, we're going to talk about a monthly bullish Gartley pattern that basically would, I think, dictates that the end of that current trend is over. We've also got a decent intraday reversal pattern in cable, and also euro dollar is looking exhausted to the downside, to say the least, and we're expecting maybe not a trend reversal in euro dollar, but at least a decent correction to the upside. So let's get back to the dollar index. All we've got on it to start with are vanilla charts. Okay, I think sometimes people have too many overlays. I'm not saying that I don't use overlays. I use Bollinger Bands. I use a couple of EMAs. I use an RSI with a 15 setting. But for the webinars, for long-term forecasters as well, it's quite good to look at a vanilla chart, okay, a completely plain chart, and just note what price action is showing us, okay. And what we also like to do as well is break it down from higher time frames, so we can even go to a monthly chart, then a weekly, then a daily, 4 hourly. We're not trading off those larger time frames, but what we are doing, we're getting a bias off them. Okay, and it's the bias that we want to be trading with. Okay, so if the sentiment is for higher levels, then we obviously, in a higher time frame, then we want to be using shorter time frames to gain our entry. So we've got the dollar index. 2 chart formations I should mention. Well, not chart formations, candlestick formations. Okay, my favourite 2 candlestick formations are outside bars and inside bars. They tell a complete opposite story. Okay, an outside bar, let's just get the drawing tool up. Okay, an outside bar is here. Okay, so it's not just a bearish engulfing bar, it's a bar that takes out the whole range of at least the previous candle. So here we can see that the bias was to the upside. Okay, the sentiment then changed and the bias turned lower. So we completely reversed this sentiment. The sentiment was going up and we did make a new high. Then we closed to the downside and we engulfed, in fact, these previous 2 weeks. So that's a bearish outside bar. Now, an inside bar is completely opposite. Okay, so we've got one here. That shows us, the outside bar shows us a change in sentiment. The inside bar shows us indecision. So when I say they're completely opposite, they are. Okay, what we need to see when we see an inside bar is we need to see a breakout in one direction or the other, because it's just purely indecision. What I think we're going to get this week, possibly, I know we're only on Tuesday, but we could get an inside bar. So it's showing indecision around this level. Now, in the previous webinars that we've hosted, okay, we've said that we don't just want to be blindly buying or selling inside and outside bars. They have to be at relevant levels. Okay, otherwise they are irrelevant. They're just a pause in price action. Okay, let's just clear this off. So if we go back to this chart, first thing I'm going to do is I'm just going to put a fib retracement tool on. So I'm taking the swing high to around 84.10. Okay, down to the swing low, which is 78.59. And I want to note this level, okay, 78.6. Because 78.6 is quite an important fib when we talk about symmetrical patterns. Okay, it forms Gartleys. It can also be seen in a lot of the other patterns, along with 88.6. But the reason I have so many fibs on isn't because I'm looking for price action to stall at every single level. Okay, but I am looking for reversals and indecision at these key points. 61.8% is a great level, but I think too much emphasis is put on 61.8%. 78.6 is more relevant to me anyway. So we'll just clear this off. Okay, so we're going to remove that fib. So this is a relevant level, the 78.6. We then put our extension tool on. Okay, and this is 161.8%, 83.24. Now that, no, it's got a little bit of leanway. It's not perfectly matched with each other, but that has formed a bearish Gartley. Okay, so just to quickly show you. And this is the symmetrical pattern. Okay, so we've got this bias for the dollar index to change and become bearish. Okay, if the dollar index does become bearish, which we're forecasting, then obviously euro dollar, sterling dollar should move to the upside. So it's always a good idea to keep quite a close eye on the dollar index. I'm not saying it's going to be forever. I'm not saying this is a major change in trend. What we're looking for in the dollar index of this pattern is a move to around between 50 and 61.8% of the whole formation, okay, which is 81.34, 80.69. These are minimum targets, okay, but you've got to remember we're looking at a weekly chart here, so that's a decent move on the currency pairs. Okay, now I'm just going to clear all of those guys off. I'm then going to take it down to a daily, well, not even going to take it down to a daily, I'm going to take it down to a 240 minute actually. So I want to be looking for levels where I should be getting short, levels where I should be getting long, etc. And here we're just going to use our extension tool because this is our high. And we note here that we've moved to 161.8%. So this is the dollar buying that we're seeing this morning. But I think at the moment that this dollar buying is going to be short-lived. Down to 60 minutes. Now, there's no indication of a reversal yet, but if it breaks this level, 82.83, then I'm probably wrong, and this dollar buying should extend a bit further up, because this again could be forming, or could have formed, okay, 61.8%, quite a decent reversal pattern to the upside, but my bias off that weekly chart, okay, is for lower levels. So let's go to another currency pair. I'm going to go to cable first. And again, we're going to break this down. Okay. Please, if you've got any questions during the webinar today, please do ask. I'm I don't want people to get left behind. I don't want people not to sort of understand what we're talking about. If there are any issues, points or disagreements that you might have, please feel free to point them out. And I always like somebody to have a different view or a different sentiment, because that's what makes up the market. So I never say somebody's right or wrong. They could be looking at a bullish pattern in 5 minutes. I could be looking at a bullish pattern in an hour or a daily formation. Okay, it takes all sorts to make a market, and that's why we've got a market. This is the monthly chart. We were in a symmetrical triangle formation that has a bias after a downtrend. Okay, so we've got the downtrend consolidation, has a bias to break to the downside, and of course here we get a inside bar here, indecision, outside bar here, and then we break to the downside. But this should be of note as well. This rejection of losses under 150, the figure last month, possible sort of doji bottom or a spike lower or whatever we want to call it. Again, I'm not going to fill this out completely, but this is 78.6% again. Okay, so we've got 1, 2, 3, and then down to the monthly Gartley. Okay, the target level again for this pattern, just remove this off, is we want to take the whole pattern, 61.8%. 50, I think it's going to surpass. So I think it's going to surpass 147.80, and I think we're going to move up to this reverse trend line, which is located. Let's just see where it is located. Around about 156.75. Okay, so we're in between the 50 and 61.8%, with trend line breakouts, with wedge breakouts, with triangle breakouts, with channel breakouts. It's very common to have a retest of the breakout level. What was support then becomes resistance. What was resistance becomes support. So this was a support line. It got broken to the downside. It now becomes a resistance line. So I think that's our key level in cable to look at off this formation. Okay. Now if we break it down again, in fact I'm going to go to the daily. Price action has been relatively choppy. Going back to a fib extension. Okay, we got up to around 261.8%. Third wave was extended. Okay, fifth wave up to 261.8%. An outside bar, okay, off the high on the daily, which hasn't been broken. Okay, so the high remains intact just about today, and I think today we're going to get another outside daily, okay, which will push this price action lower, but only temporarily. If we go to our channel, sorry. Okay, I'm looking for a 3-wave correction. So I've had my 5 waves up, and I'm then looking for a choppy 3-wave correction lower in this channel formation. If we put the fib retracement tool on now, you can note that 50% just about comes in at the channel base. This then, and you see I said I'm only going to be short-term bearish on cable. I lost my channel. This then I think is going to be left shoulder, right shoulder, and the head coming in here, with this being the neckline. Okay, so we've got our neckline there. Now, where would a target? So short-term bearish towards sort of 150.50, but then aggressively looking for longs to the upside. Target level for head and shoulders breakout. Okay, we want to be taking the low and then to the neckline. We duplicate that. We don't know where it's going to break yet. Okay, but we're second guessing, as sometimes you have to. And then we've got 157, the figure, okay, as a target level. So risk reward for buying in around about 150.50 is extremely good, with a stop of potentially 50-70 points, target level 700 odd points. Again, if we draw a horizontal line on here, this is why we break down the time frames. Going back to monthly, sorry. Let's remove this off. We'll put our reverse trend line on again. Not a million miles off, is it? So, short-term bearish, down to that right shoulder, but expect trading to be choppy because this is wave C of an ABC correction, and it should be made up of 3 waves as well. So expect it not just to fly down towards that 150.50 level. You're going to have to sort of look for rallies to sell into. Then trying to buy near that 150.50 neckline, right shoulder line, and then really decent risk reward trade to get back up towards 157, the figure. At that point, I would say get out of longs and start reversing that outlook, because it's going to turn bearish again for cable. Intraday, again we're looking for bear trends now. Pause around 161.8%, probably going to get a small correction. Inside bars being posted, it breaks the low, and the next target level really is around 151.40. I'd then expect, so sink along these lines. It's being the start of this C leg, which is normally made up of inside legs, which are made up of inside legs, which are made up of inside legs. Drive yourself balmy. So same along this level, and then a move back up, and then that move down towards 150.50. So intraday bias to the downside towards 151.40, then a 3-wave correction higher in a B leg inside this big C leg, and then the move down to the downside. Any questions about cable? No? Okay. Let's remove all these studies. I'm going to go to Euro Sterling next, just because this will explain why the bias isn't just fully just buying or selling the dollar, because we've got this Euro Sterling aspect that will basically let cable move lower with while it lets euro dollar move higher. One thing you should also remember is obviously with the dollar basket, there's more euro in there than there is sterling. I hope that makes sense. So the dollar index will have a tendency to track euro dollar more than it will cable. Let's break it down. Monthly, we've had a decent rejection. We've been in the channel for quite some time. Decent spikes higher through the channel top, and the bias is now to the downside. If we go down to a weekly, again we've got an outside bar here. Now remember what I said about it taking out all of the previous candle, but it doesn't the body doesn't have to engulf. Okay, we're not talking about a bearish or a bullish engulfing candle. We're talking about an outside candle. It's the range and the fact that it's a negative close, if you like, that makes it a bearish outside bar. So we had a bearish outside bar off the top. Okay, we had a move back up, a rejection, and then this large gap open, which is still open, and I think will be left open for quite some time. We'll take it down to dailies. And do you see why sometimes it's just good to have a vanilla chart on? Okay, we haven't got trend indicators. We haven't got parabolic ZAR, moving averages, acting as support and resistance. We haven't got channels on, but we're just really looking for price action around fibs, and I'm quite fanatical about fib levels. So here again down to 161.8%, but the bias is still for lower levels. So we've got this correction higher, and then a move down towards 81.90. Okay, so as I was saying, at the moment, intraday, we can see the possibility of euro dollar still rising, but with cable still getting the chance to push to the downside, because we've got a euro sterling bullish bias. If we looked at very short time frames on euro sterling, what we're looking at this morning, maybe it's been blown out a little bit. It's had a bit of a head and shoulders formation. It spiked through the base, but I think the bias is still to the upside. Okay, we're making higher highs and higher lows. I still look for euro sterling to move higher. We've got to remember, off this daily chart, this should be a choppy three-wave correction. The really maximum that we should be looking at, wasn't a bad guess, 85.02, 85.57, both relevant levels. Okay, this was an area before of support, this is an area of resistance, so probably up there, up to 85.02, and then really want to note price action, engulfings or outside bars, inside bars around that level, to get us short, to get us back down towards 81.90. Okay. Any questions about cable or euro sterling? Easy groups, please. Okay, I'm going to show you something on the daily here, then we're going to go back to the weekly to try and work out where price action is going to, whether or not it's worth a buy or a sell trade. So here we've got the 261.8% extension level. Okay, it spiked through, we've got an inside bar, then moves to the upside. It did actually break the high of the trigger candle and then move down again. So the bias here for me is to the upside, but I'm expecting trading to be choppy. I don't know if anybody looks at DeMark. DeMark has 9 and 13 counts. This candle here, okay, from the 28th of March was a 9 count. So the DeMark indicators are highlighting a move to the upside as well. If we go to weekly, I think we've got a very good chance of posting an inside bar this week, which is going to cause trading to be choppy. But the medium-term bias, and we're talking about, this predictions today are up to a month really, and then we reevaluate. But again, I think we move higher. Choppy three wave sequence up to this sort of level, up towards sort of 133.50, and then again we've got left shoulder, right shoulder, and the head. So even though these formations are nowhere near, I mean, this isn't even halfway through a formation, and we are trying to second guess what's going to happen, but we're using fib levels, inside bars, price action, chart analysis, chart patterns, okay, to try and get on decent risk reward trades. We're looking for exhaustion levels, etc., etc., etc. So again, a move back up towards sort of 133.50 as that dollar index moves to the downside. Okay, so the dollar index moving to the downside towards that target level that we talked about, the 61.8% level. That will then give cable room to move to the upside. It will also give euro dollar room to move to the upside, but euro dollar not as aggressive as cable, because remember we've got that euro sterling downward bias. If we take the fib off and we put our retracement tool on, okay, 61.8% this time is lining up pretty well with the right shoulder coming in at sort of 133.50. Just quickly see what's happening on the dollar index. Yuck. Okay, not a great deal. A lot of indecision here. There will be bears and bulls fighting it out at the moment, because the bears will be seeing a three wave corrective pattern, which is common in fourth wave, and the bulls will probably be seeing levels towards 161.8% being rejected and correcting lower before the move back up here. So intraday I would expect some pretty choppy trading. It's really until this, and it's all coming down to the dollars today, I think, until this is broken, sort of 82.80. That's the low side of this candle. 82.66. Could happen within the next hour. Could have to wait a bit, really. So any questions about what we've talked about up to now? I would have preferred to have seen, obviously, this last hourly candle. I would have preferred to have seen a move to the downside and then a close near the low of the candle. The fact it's rejecting dips, or dips are being bought into, does give it a slight bias to the upside intraday. No questions? Yen pairs. In fact, we're going to euro yen first. Let's get the codes because I don't have to put them back in. Okay, this is quite relevant. This is euro yen monthly. Obviously, we've had inside bar here, decent moves up. We've had no sort of rejections or reversal candles, but we have had an inside bar here. Okay, so all of March's trading was restricted to February's range, which basically shows indecision. And what should be noted is the spikes. Okay, so spikes higher, finding rejection, and also this previous high. Yes, we did close above it, but it's I don't think it's very solid. Fill extension tools. Okay, so past 261.8%. So again, we can't get very many clues from that. What we can get clues from that gap got closed literally to the pip as well, which was quite a nice gap close. Okay, I think an ABCD formation is what I'm going for at the moment. About 117.16, 20 level for the ABCD formation. Trading within these patterns has a tendency to be quite mixed and volatile. So this is the daily chart. What we can see is sort of a three-wave pattern lower. Can't really pick waves out of this one, and then a three-wave pattern down in here. If we go down to even shorter time frames, now the consensus is really to be selling gains. What we can do here though, we can get a fib on. Okay, so wave 1, choppy move back up. In wave 2, very choppy move down in wave 3. We've seen an outside bar being posted on this 240-minute chart, but when I said it's got to be at a significant level, it's not at a significant level. So should I take note of it? Well, at the moment we're still posting higher highs, higher lows. It is looking exhausted. I know that if I put momentum indicator on here I'm going to get some divergence because the sell-offs now are weakening. But until I really see something aggressive in the other direction, I think the bias here is still for lower levels, and that really brings us to dollar yen. I will do at the end. Somebody's just asking if we can go through the dollar index again. As we've already been through it twice, I don't think it's really fair on everybody else that's here at the moment. Just reading the fresh chart. Which chart didn't come up? Was that the dollar index chart? If so, I'll quickly go through it now. Somebody talk to me. What we're doing to the dollar index, dollar yen. Invalid symbol. There's actually some intra-go resistance around 30 in dollar yen. Okay, monthly again. It's quite relevant. This previous high. With rejected levels above it. This is on the monthly chart. Thanks, Tom. Can we get fibs on? Not really. There's not much of a pause in price action around 161.8%. 261.8% not seen up until sort of 98.14. Again, the gap opened from a couple of weeks ago. Got closed quite quickly, quite aggressively. Take it down to dailies. We've got a significant level that suggests that the downside should be limited. Got 161.8% coming in at 92.54. I think the low trade was about 10 points above that this morning. 92.57, so 3 points above that. 78.6 coming in down here. So I mean, at the moment, for dollar yen, I think the rate as well of the sell-off. We've got an outside bar here, got an outside bar off the top on the dailies. We have had a spike down towards 161.8% and a move back up, but I still think that the bias is to the downside. We could well get a three wave correction here. And these are our prime reversal levels, 93.41 and 93.93. This is looking more prime than 93.41, being an area of previous support. So we can see here we've spiked through on numerous occasions. Okay, we've broken, we haven't retested as yet. So short-term bias probably to the upside now, but the medium-term bias I think is still for lower levels, sort of 80, 89, 99, well, let's call it 90 the figure, as target levels. And again, time scale, probably a week and a bit. Quite strange actually, but first thing on Bloomberg this morning when I switched it on at just gone 5 o'clock, where they're talking about the Japanese finance minister basically put his foot in it by saying that they would go to certain limits to protect their interest in the yen, but that they wouldn't go to extremes. And you know, the market has seen that as being quite bearish or bullish, or bearish for the dollar, and bullish for yen. And obviously we've had that spike down in dollar yen. But as I said, I'm 90% technical trader. I think a small uptick, as long as it's not too aggressive, as long as it's not through that 93 level, and then a push back down to the downside. So we're just going to quickly go back to the dollar index for those that missed it. Okay, very quickly as well. Basically it's saying that we're probably going to post an inside bar this week. Far too early to tell, being Tuesday. And I would have really liked last week's candle to be a larger green, if you like, for it to gyrate around inside. This, I think, is a bearish Gartley pattern that lines up pretty well with the fibs. We've already done those. Okay, with a target level of around here, 80.76. So the bias is to the downside. When we go back to very short time frames, okay, just moving up off 161.8%. My belief is that this is just a correction before the next sell-off. That's what I'm looking for today anyway. But flipping that back, I'm still looking for lower levels in cable. I'm looking to buy dips in euro dollar. Any questions, guys? Any currency pairs that we haven't covered that you would like to cover? No problem. We've covered euro yen, dollar yen, cable, euro sterling, euro dollar, dollar index. 105.52 is my target level in Aussie dollar, medium term. Dollar CAD. I've actually got a buy trigger in at 101.21 and at 101.04, so I'm basically looking to fade into dollar CAD. Euro New Zealand I never look at. Not that I'm not saying it's a decent pair, but I try to look at everything that's got relatively tight spreads on it, and what most of our clients look to trade, which is the majors: Euro Swiss, Sterling Swiss, Sterling Yen, Aussie Yen, We even look at Euro SEK, but even that pair's not that popular. Dollar CAD's quite an interesting one actually. If I get the code right. Please get to my level. Okay, monthly. Pretty lackluster, should we say. It actually broke a trend line, and then I thought it might just use that as reverse support and move higher. But it hasn't as yet. Okay, down to weekly. I had a bit of a strange formation in here. I was looking at that pattern, so 161.8%. There is a possible Gartley in here. Oops. Set the none to the vicar. So I was quite happy to take shorts around 103.16. Formed an inside bar and then broke to the downside, then came up, rallies were rejected, etc, etc, etc. I'm not quite sure if this is going to fully play out. I mean, I'm still in our medium term analysis. We're short from 102.27. Going back to intraday, I've got quite solid support as well, 101.21, and it's the way that we've sort of moved lower. It's been pretty erratic. Okay, so we've got an ABCD formation coming in at 101.21. We've also got one of the technical indicators that I use to decipher sort of long-term and medium-term trend, and that comes in at 101.19. So I'm sort of quite happy to start taking longs pretty soon, within about 7 pips of current levels. Also, if we just pull this in a little bit. Use a retracement tool. Okay, it's round about 38.2. It has spiked through 38.2. I think it's pretty exhausted. You've got to remember the dollar CAD has been really, dollar CAD in particular has been very hard to decipher lately. When other pairs have been buying dollars, the CAD has been selling dollars, or dollar CAD has been selling dollars, I should say, and vice versa. So it's really had a mind of its own, and it's not even really run -1 correlated with yes, took long there and got pipped out today. Bummer. It's not really -1 correlated with Aussie dollar at the moment. Like I said, I've got support there. I will be taking longs if it gets there. There's not a lot else I can say about that one. Yeah, it's very correlated with oil. It's just, I don't know, it's been a bit of a wild beast. It hasn't really reacted around what I thought was support and resistance levels. Like I said, sort of that reverse trend line, I thought we might get a decent push up from that. That didn't really happen. 38.2 didn't really happen. 23.6 didn't really happen. I mean, I didn't really get any reversal candles, inside candles. I mean, I got an inside candle here and I got an inside candle here. it took a long time to break the low. These could have quite easily been inside soldiers, as they're called. It would have only taken a bullish engulfing candle there to take out a bearish view. It's really grinded lower, and I think it's really on its last legs. But we will wait and see. Any other questions at all? Aussie dollar we might as well quickly do while I've got 5 minutes. Monthly, we're in a large triangle formation. That, after a bull run, has a bias to break to the upside, so you'd basically take the flag if she breaks, duplicate, take the low, and that would be your medium term target level up around 125 the figure. Short time frames, well, not short time frames. Monthly, we've got a bullish outside bar for last month. Just put it all the way down into the weekly, which we did. We basically called a low around here because, again, ABCD formations are fantastic formations, not just the standalone, but of parts of larger symmetrical patterns, because they do form parts of larger symmetrical patterns. Okay, so you've sort of got a bit of a double whammy effect, if you like. So a perfect ABCD formation was here, and I think it stopped within about 5 pips of the calculated or the measured move lower daily. We then had a head and shoulders formation, if I can find it in here now, off the low. Not going to give me that chart, are you? Losing data on these charts, it's driving me absolutely balmy. I don't know why. Having to go to silly time frames like 2:39 minutes. For 2:40 minutes it doesn't happen. So we basically had this formation at the low. The target level was around here. 105 was also a relevant level because it was a fib. So we had a sort of small consolidation again, as if you're an Elliott wave enthusiast, which I'm not, we still had a consolidating triangle there, so which is commonplace in fourth waves. Target level for that one. Okay, it was around about here. So it's sort of been quite textbook, really, and it's done it as it's told, if you like. I still think we break through this trend line, but this is obviously quite formidable. Coming in at about 105.14 level intraday. There's no real reason not to be buying dips. They didn't do anything with the interest rates last night either, did they? Sort of trying to pick the end of a trend now, really. Okay, that's our 50 minutes up. I hope you've enjoyed the analysis. More importantly, I hope you find it educational and hopefully profitable. We will be back next month, same time, I believe, to update you on the medium-term analysis. Now, I've started working for a fund, but we haven't got a personal fund running yet. We're still looking at quite a few. Hi, Prakash. Good to speak to you. We've got a few irons in a few fires, but I don't know why these things seem to drag on and take forever. Yes, we're quite lucky. We're FSA regulated anyway, but to hold and trade clients' money, you need separate regulation. We are sort of partners with another company at the moment that could potentially look at doing something with us. So we'll wait and see. Okay, guys, thanks very much. And like I said, I'll visit the website. There's daily free calls on there. Okay, it's firstfortrading.com. And we offer a free a discounted 1 month trial. We've also got an iPad application that's going to be launched soon, so that you guys that are on the move a lot will be able to be kept updated with intraday calls and analysis. Again, it's another thing that seems to be going on. I mean, the institutional app is ready, and the beta version is being tested at the moment. That should be out there within 2 weeks. I would say that the retail app is then going to follow that, but it shouldn't be that far behind. End of April, I would have thought. At that point, we'll also be restructuring all the pricing on our website. So just keep an eye on it. See what's going on. Thanks, Don. Okay, guys. The best of luck. May the force be with you, and I'll speak to you again soon. Thank you.